The FTX disaster has threatened the entire crypto ecosystem, or has it? As rules and regulations become the hottest topic in the cryptocurrency space, let's find out how experienced crypto investors are approaching this controversial climate. My next guest, Jennifer Cheng Lo, is an experienced crypto and blockchain investor. How are professional investors feeling post-FTX? Jennifer, welcome to the Daily Drop.
Thank you for having me, Bobby, and Daily Drop and News Forum. So excited to be here.
Right. Well, I'm glad we finally got you on here. Okay, let's start with FTX because the whole world is talking about it, and I know you're going to have an informed opinion. How has the FTX debacle affected the investment community?
Actually, I think the FTX debacle is it's a huge wake-up call. And for those of us who haven't been, I've actually already been investing in Web3 and crypto and blockchain for a while now. So I think it's a collective wake-up call to investors across all sectors to really make sure that not only we're doing our diligence, but that we actually always have to be aware of bad actors and other forces. And the other thing that I've always told a lot of my friends who are sometimes they're dabbling in crypto or they're intrepid investors, but there's a saying that if it's not your keys or you're not having it on cold storage or on your own wallet, it's not your crypto. So make sure, for me, I'm taking it as a lesson for a lot of us, I'm sure, to make sure you're diversifying and not putting all your eggs into one basket. And I think in terms of actual sentiment, I've been very lucky. I have not been affected. I'm sure there are others in my immediate circle who are. I know others who are actually investors in FTX. And obviously, I empathize with those who are very directly affected. And thank goodness, I'm going to knock some wood, I haven't been, but I'm sure there will be some ramifications as well as after effects to come.
Yeah, and that's, I think it's really nice that you express that empathy because these are real people who've been hurt. But you did also mention due diligence, which is also very relevant. Like, do you think that investors are going to do more thorough due diligence now?
Well, for me, I've always been very very adamant about doing my diligence, which is basically that phrase DYOR, do your own research. You need to really make sure that you really believe in a company. You know that the mission, the values, the vision are all aligned. You need to investigate sort of every aspect before you put your own money in. And for me, as a family office, I'm investing MOM, which is my own money. So I'm going to continue to be very diligent about doing my diligence. I can only expect that other people, both retail, institutional investors, as well as people who are investing their hard-earned money, are only going to be doing more diligence because you don't want to have something affect you and have it come back to bite you after the fact. You definitely want to do all your research and have all the T's and C's sort of checking out way in the beginning. So I think we'll.
And in terms of trust, like how much trust do investors still have in Web3 founders?
That's a great question. I think right now we actually have to look at the whole macro environment. I don't think it's just Web3 and crypto that's having a winter. I think collectively markets are just in chaos because of the collective black swan event we've had with the ongoing pandemic, with geopolitical tensions, with a lot of other factors at play. So I think right now there's been a general, I think, lack of trust that needs to be built up. For me, I've been very lucky. I think one of the things that we have been doing with our portfolio, and we do have a sizable portfolio of direct investments, as well as investing in fund managers who are helping us make more co-investments and look for even better investments, is that I think it comes down to curation. So when you're really very focused on curating and picking the best and really focusing on selecting that selection process, as well as deciding, okay, I'm going to double down more on my winners, or hey, this is not working out. We have to help them restructure or help these companies have some M&A.
You know what, Jen? Let's get more into everything you're saying after the break. We got Jennifer Cheng Lo here on the Daily Drop. Welcome back to Daily Drop. Got Jennifer Cheng Lo here. Okay, let's talk Bitcoin and Ethereum, because they've been affected like a little bit, but they haven't really been affected post FTX. Does this indicate their strength as investments long term?
Well, I'm really glad you pointed that out, because Bitcoin and Ethereum, in my mind, because they are basically the biggest coins in terms of market dominance. I think they function more or less as what you would call, in a normal market, you would say, oh, these are big cap companies, meaning companies with big market capitalizations. They're worth billions and millions of dollars. There's a lot of volume, and they're not. So a big cap stock, for example, would be a company like Apple. And then a small cap stock would be some more volatile company. There might be a lot more ups and downs. And the reason why Bitcoin and Ethereum, I think, have been holding up well is that, structurally speaking, Ethereum, I think of it like dollars, right? And Bitcoin, I think of it as gold. One reason why I think of Ethereum as dollars is because I transact, and a lot of other people who collect NFTs, we would transact in Ethereum. And also, after the merge, I think a lot of the infrastructure became more solid as well, and they do a lot of different initiatives with different protocols and other chains. So, and then with Bitcoin, a lot of people do what we call hodling, or holding long term, or DCAing, almost like gold. So a lot of people.
Sorry, do you see DCA? I know that's an important term. Can you just define that for our audience?
So DCA is something that investors talk about, meaning it stands for dollar cost averaging. So dollar cost averaging is basically, you don't want to put all your money in at once and then have it out and then be all jerky about it. So you smooth it out by saying like, maybe I'll invest $10 per day into Bitcoin. Okay, I've invested $300 over the course of the month. So you can capture the highs and the lows, and it's not going to be like all jerky. So dollar cost averaging is a way of slowly accumulating investments or assets that you are thinking that will be worth holding in the long run. So for me, I bought in on Bitcoin and Ethereum and some of the other crypto and the coins much earlier than everyone else did, probably like 2015, 2016. Well, not much earlier, but in the earlier wave. So one of the reasons why I think of these companies as these coins as kind of like gold, for example. I used to say Litecoin was like silver, is because if you go to traditional celebrations, and if you look at cultures, a lot of them have held gold through times of war, through times of turmoil. A child is born, people are getting married, you would gift gold. So actually, when my children were born, they were gifted crypto. And I actually also gift crypto and NFTs, because I also think of them as modern day assets and gold. So that's how I would liken Bitcoin, especially there's a limited supply of it, and much like gold.
Look, and I think that's a great explanation, and very practical. And look, it's a bear market, and people are looking for practical advice. And we have been in a bear market most of the year, and 2023 looks bad. So I guess my question is, like, what makes sense from an investment standpoint?
That's actually really great too. A lot of people are asking me like, how long is this bear market going to last? And the thing is, the good thing about markets is that they're cyclical. So we're not going to be in a bear market forever. If you look, I think of it right now as almost like a wartime environment. So basically, if you look after the roaring 20s, if you look after during World War II, for example, there were a lot of big name companies that became penny stocks. And people who saw like, oh, this might be a time where asset prices are dropping. That might or might not be a good time to slowly accumulate, especially obviously after you satisfied your basic needs. And the other thing that I would also suggest very heavily is don't put all your eggs into one basket. So smart investors tend to diversify no matter what, whether we're in a bear market or a bull market. So I would never say, oh, put all your net worth into Bitcoin or put all of it into Ethereum. I would say definitely look at, you know, a basket of opportunities. If I were saying like, okay, well, you're young and you have a lot of life left ahead of you, for example, you would have more equities
Right.
than bonds.
Look, very,
So
very practical and simple, Jen. We're going to go to break. We got more with Jennifer Cheng Lo here on the Daily Drop. We're back to Daily Drop. I got Jennifer Cheng Lo. Okay, so Jen, let's switch gears a little bit. Let's talk regulations. This has been the dominant conversation post FTX. Everybody's bracing themselves for more regulations. Do you think we are going to see more regulations coming?
I think without a doubt, we're going to see more regulations coming. Up till now, crypto has kind of been kind of like the wild, wild west, right? So if everyone is like rushing out to, pan for gold, and I mean, you have to have some kind of structure as well as regulations in place so that you can make sure. I think everyone would say so at this point that you need some kind of regulations in place to make sure that you can have the good actors continue to be successful and the bad actors will be weeded out. And the other thing is that for the sake of decentralization, as well as some amount of centralization and transparency, um, I don't think anyone would argue that regulations of some kind are needed. Whether they're at different levels or different degrees is another question. But I think we are definitely going to see more regulations, and rightly so.
But okay, but this is the question, right? Because obviously, I mean, you keep hearing from the institutional side, people want safety, right? They don't want an FTX to happen. But at the same time, from the industry, you hear a lot about, well, will innovation be stifled? Like, how will regulations affect investment?
I think they can actually work in tandem, because I think if you have the proper regulations in place, then people won't be the trust will be rebuilt. Also, people will know they can act within certain parameters. I think you can be creative and innovative and future minded without having no um, ramifications for any actions at all. Right. And I think we're evolving. I mean, back when the internet was nascent, there was not many regulations in place. So that's why you would see what was equivalent to the dot-com boom and bust, right? And people realize, well, technology is here to stay. Blockchain, crypto, Web3, they're here to stay. But what needs to happen is that we need to learn from, in the first crypto, I guess, winter reset, we had Mount Gox. We also, I mean, in the subsequent years, I mean, Lunaterra, we've also had obviously the big blow up of FTX, right? So I think it's almost like paying your taxes. You have to pay your taxes. You can't just not be paying your taxes or not be in compliance. So I think it is definitely possible to foster innovation and entrepreneurship and creatorship and building, but there needs to be a framework as well as some kind of structure in place. You can't just kind of be all rampant and completely decentralized and chaotic.
But what's interesting too, because you referenced FTX, is that FTX is outside of the U.S. jurisdiction, right? So now, like legally, they're trying to figure that out, but they were based in the Bahamas. So there is an issue in terms of consistency across international jurisdictions. Like how can we find the needed consistency across those international jurisdictions?
This is also super excellent. So what we saw with SBF is that he was eventually extradited, which means that international law does prevail. You can't just kind of do whatever and be based wherever. Sorry, I'm just going to comment on that, which is you I think right now, obviously, there will be different degrees of regulation, and obviously by different jurisdiction. For example, if I'm in Hong Kong versus Dubai versus Singapore versus US versus Canada, there will be different laws that apply. But I do think that, for example, if there's AML, for example, anti money laundering, or different sort of basic structure set in place, that kind of goes without question. Or if, for example, someone is uh, operating outside the bounds of legality in like in a very gray area, just everywhere, then it's very unlikely that they will be able to do that for a sustainable period forever. Like you basically can't keep a company that has no business model, or a Ponzi scheme, or a company that is misusing funds, go on forever anyways, right? So I think it's kind of a moot point to just say like, oh, well, regulations don't apply anywhere. I think there will be specific sets, and there will be almost a general sort of international sort of agreement and accord when it comes to financial fintech
Okay.
regulation
And that's
funds.
great. And we know you're in Hong Kong, and we appreciate that perspective. We got Jennifer Cheng Lo on the Daily Drop. We're back to the Daily Drop. We got Jennifer Cheng Lo. Okay, so Jen, the mainstream media, I don't know why you keep hearing things like crypto's a scam and it's going to die and it should be illegal and all these things. But you've been in the space for a long time, right? You're a real pro here. What do you think of crypto as an investment long term?
Well, I'm very biased. I actually really, when I first, you know, I actually, okay, you're talking to me. I'm so passionate about NFTs and metaverses and crypto in itself. So I see crypto and actually blockchain. I see blockchain as the building blocks of the structure of Web3. It's like the technology that's here to stay, right? Anywhere from storage of data to smart contracts. It's revolutionary. And when people say, "Oh, is it part of the future?" I'm like, "Well, yeah, it was in the past and the present. So it's an indelible part of the future, without question." But the other thing that I think is very fascinating is that I think Web3 is sort of the culmination of art, culture, media, technology, and in terms of decentralized finance and empowering people at creators, entrepreneurs, investors alike. There hasn't been anything like this before. This is really quite a cultural, technological, seismic revolution, for lack of a better word. So I don't know what stage we're at. Definitely in the beginning, right? And I'm really excited to see what unfolds, because even right now, when I look at NFTs, people are like, "Oh, those are JPEGs. That's so silly. Why do you have a JPEG of a monkey, or why do you have a JPEG of this?" And it's just like, well, these are actually passports to communities, and the best communities underscore the best metaverses. And the best metaverses are all about gamification, community interaction, and really being able to bring the creator economy to the forefront. So I think it's here to stay. I love it. I mean, I'm a creator, I'm a pianist, I'm a musician. Like Bobby, we have art and entertainment roots. So I know it's here to stay. And I can only anticipate that my children and great grandchildren and my grandchildren. I don't have great grandchildren or grandchildren yet, but I anticipate that our next generation are going to really, delve even further, because I think what we're seeing is the cusp of a giant, growing for or iceberg.
And it's amazing because you really do understand every element of the Web3 ecosystem, because there's some very diverse aspects, right? It's very wide ranging, and your fingers are clearly on the pulse. I will say though, it's also been a tough year because a lot of people have lost a lot of money this year investing in cryptocurrency. So you can understand too, why some people are so negative. But what would you say to those people?
Well, what I would say to those people is right now, actually, all markets are suffering, right? And what you
Mhm.
can do, what I try to do, is I don't try to bet all on myself. I don't want to call all the shots. Actually, a lot of entrepreneurs and investors, they think like, "Oh, I have to do it all myself. Oh, I have to put 100% of my net worth into my company, or I have to put 100% of my net worth into this." But what I've done and what I think is actually going to be the future is that you can start looking into communities and you can start looking into DAOs, collective investment, right? Or the other thing that you can look into is I actually see fund managers and people who are learning to manage their own money as future entrepreneurs. I actually not only just invest in direct investments, but like I mentioned before, I invest in emerging fund managers, those who are really great at not just trading crypto, but making long-term early bets. And think of it this way, you learn when you come up with adversity. So if you are losing money, then don't necessarily capture that loss on paper, right? If you can afford to hold and stay put and kind of divorce your emotions from the equation, just think like, okay, in the long run, do I think these particular large cap assets will hold up? Like, for example, Bitcoin and Ethereum. Do I think
You know what, Jen? You're going to have to come back. You're such a fountain of knowledge. I appreciate how you're able to take high-level ideas, make them very clear for our audience. And just thank you so much for coming.
Thank you so much for having me, Daily Drop and News Foreman Bobby. It's such a pleasure.
Well, we never offer professional investment advice. On this show, talk to a licensed professional for that. We like to analyze the current cryptocurrency climate. FTX, rightly or wrongly, has catapulted crypto into the business mainstream. The question, is cryptocurrency dying a slow death? Or are we witnessing Black Friday sales prices for the next dominant technology trend in finance? We'll see you next time on The Daily Drop.